Good morning, everybody. Hey, how you doing? I'm sending out the back signal on Discord. Let people come on in. Let y'all come on in. Y'all drop something in the chat so I know who here while I let everybody get in. I know sometimes be running non-skippable ads in the beginning. So while it's doing that, and I'm sending out the back signal, I'm gonna let y'all come on in. Feel like I gotta sneeze. I am in the Discord in the voice. If anybody wants to pull up in there and all right. All right, man. Should be enough time for everybody to be in, everybody to join in. All the ads should be done ran by now. Everybody should I hate spell check. What up, Tim? What up, Fishbone the Great? Why you hate spell check? What it say? What up, time? Rub my hands like Birdman. Durham. I don't know what Durham is, but Birdman Durham in the building. Hate spell check. What up? What's up, man? Here to learn and share. Good morning to you. The birds are chirping. What's up, Rhonda Green? Hey, Rhonda got a new picture on there. What's up, Rhonda Green with the new picture? With the new hair? I see you with the new hair. With the Ice Spice hair. What's up, Rhonda Green? Got the new hair color. Good morning, Kim. What's going on, Tish? How you doing? What's going on, the Black Al Davis? What it is, Fishbone? What's up, FC? I ain't seen you in a month of Sundays, FC. What's going on, Sonia? Oh, Durham, North Carolina. Okay, Birdman, Durham, North Carolina. Okay, I got you. Hola. Buenos dias, Valentin. Buenos dias. Hola. All right, man. How y'all doing, man? How y'all doing today, man? Y'all doing all right, man? Did y'all have a good weekend? Oh, wait a minute. Before I go to running my mouth. Good morning, everybody. If this is your first time tuning in to Tim's Tidbits, please allow me to say welcome. But if it's not your first time tuning in to Tim's Tidbits, I still want to say welcome and give you a nice hearty, well, thank you for always tuning in to Tim's Tidbits. We are a very close-knit, small community of like-minded traders who gather together daily to discuss the overnight price action. What's up, Deborah? What's going on, Deborah? Right? We discussed the price action from the night before, and we just talk about price action all the time. That's all we talk about. We don't put any indicators on the charts. Well, some of us may, but I don't. I don't put any indicators on the chart. I just talk about the price action because I trade ICT concepts. And I just share my thoughts of these concepts on Al Gore's Internet. Right? And speaking of on Al Gore's Internet, you are now in tune to another episode of the Overnight Price Action Review. Right? And like I said, we just talk about the overnight price action every day at 9 a.m. Eastern Time. And then we hang out in the Discord for the members of the gang, the ones that are part of the paid YouTube YouTube membership. We hang out in there. We talk about stuff. Speaking of hanging out in there, we had our third Sunday Q&A with the Black Spiders and the Mentees. I think it went very well last night. And speaking of mentees, this week, Friday, will be the last official educational video for the Art of Reading Price Action series. It will be number 19, and it's going to be on the power of 3. Right after that, we will move into the tape reading phase. Now, so this Friday, the power of 3 is the last official educational video. If I think of something that might be useful in the future, I'll make a video and drop it as part of the series. But this is the last official one. Next Wednesday, right? Not this Wednesday. Next Wednesday will be the last official homework review. Right. After that, we're moving into the tape reading portion of the mentorship. And we're still, as long as there's somebody, as long as somebody is in the mentorship. Hey, Black Al Davis, stop asking questions that I'm already answering. Right? Does that mean the mentorship is over? No, the mentorship is not over. It's just the official videos for the series, because all the videos in the series, put them on Al Gore's internet for free. What the $24.99 a month was giving you access to me as a mentor through the series, right? And so as long as somebody's in the paid mentorship, we still gonna do the second Sunday Q&As. We still gonna do the Wednesday night homework reviews, right? We're gonna move into tape reading, right? Tape reading. Now the tape reading is only going to be with the mentees on Monday mornings, right? Monday morning is the day I've designated for tape reading. It's only going to be with the mentees. It's only going to be viewable for the mentees, right? As long as somebody's in the paid portion of the mentorship, we're going to still do second Sunday Q&As, the Wednesday night homework reviews, and the tape reading, right? The tape reading. That's what we're gonna do, because the $24.99 a month is access to me outside of the videos for like help with stuff that you don't understand about the concepts of trying to walk you through the concepts, right? Left seat, right seat type thing. That's what it. But this week is just the end of the official educational video. That's the end of the So we've come to the end of the syllabus. That's all, because I don't believe in like constantly trying to teach to make people feel like, oh, there's more you got to know. Oh, there's more you got to know. When we get to the power of 3, that's going to be the gist of everything you need to know. Because when it comes to like the ICT concepts, right? It's a lot of stuff that's repetitive, right? You're looking at the same thing in a different way. You know what I'm saying? You're looking at the same thing in a different way, because my humble opinion is everything is built around market maker models. You know what I'm saying? That's my humble opinion. Everything is built around market maker models. You know what I'm saying? But market maker models consist of the power of 3, right? Because the power of 3, right, is just accumulation, manipulation, and distribution, right? And when you think about that, that's just how you form a candle. The candle opens, It goes in a direction, it goes in another direction, and then it closes, right? In the way I pointed, that would be an open, high, low, and a close. That's a down close candle, right? If you open, low, high, close, that's an up close candle, right? Accumulation, manipulation, distribution, close, up close candle, power of three. It's like a lot of stuff is repetitive. And so people like myself fall victim to thinking I got to keep learning, because you have like a lot of people that are shysters out on the internet who understand that it's as simple as this, but they want to make it sound super complicated so they can keep siphoning hundreds and thousands of dollars out of you to teach you the next best thing. But that's not me. I'm just trying to give you exactly what you need to be able to trade. Because like I told you in the beginning, if you go back to the beginning, when we first start talking about it, I said everything you need to know is right here with the way IPTA distributes price, with the consolidation, expansion, retrace, deliver, consolidation, expand, reverse, retrace, deliver, right? If you think about everything that we've been doing, starts at a consolidation, an expansion, a retrace, and a deliver, or consolidation, an expansion, a reverse, a retrace, and a deliver, right? What's a Judas swing? A consolidation, expansion, reverse, retrace, deliver. But a fancy term called Judas swing have everybody looking for a Judas swing. You done forgot that you looking for a consolidation, expansion, reverse, retrace, deliver. Now I'm looking for the Judas swing. Right? It's all about the narrative. The narrative, what's going on. Right? I just talked about reclaimed order blocks. Here, let me go find reclaimed order blocks. Let me look for a reclaimed order block. All right. All you're doing is on the right side of the market maker model. Right? You're on the right side of the market maker model. You consolidate, you expand, retrace, and deliver. Right? That's all you're doing with a reclaimed order block. You're on the right side of a market maker model, market maker buy model, right? Here's your, well, I got to do it backwards. Here's your bullish order block on the sell side or the left side of the model. When you get to the right side of the model, right, you consolidate, you expand, you retrace, and you deliver, right? But while you was consolidating and expanding, you traded back down into this bullish order block and you reclaimed that order block, and then you went up. Consolidate, expand, retrace, deliver. But when you hear a fancy new term, reclaimed order block, let me look for the reclaimed order block everywhere. Let me look everywhere for the reclaimed order block. Stacks on stacks on stacks on stack, blocks on blocks on blocks on blocks. What's up, Said Banks? What's going on, Said Banks? I ain't gonna hold you. That's my first time ever seeing that name. Said, if this ain't your first time pulling up, I truly jolly pies. But if it is your first time pulling up, welcome. Now, let's get into the overnight price action review. It's 9:16 on a Monday morning. Let's come over here. So let's stretch this out. As y'all see, we got a daily SIBI above us. We've got above this 4-hour SIBI, right? This is all stuff that was marked out during my weekend chart prep, right? So for those who trade the new week opening gap or incorporate the new week opening gap into their trading, the new week opening gap is right here. We closed Friday at 55.52.75, and we opened up Sunday evening at 55.64.50. Right. So we had us a pretty nice little gap up there on the ES, a gap up of 11 3/4 points. Right. This is your new week opening gap. If you're into that, the new week opening gap is the difference between Friday's close and Monday's open. It's the exact same thing as a new day opening gap, which is the difference between the close of one day to the open of the next day, meaning the close on Monday to the opening on Tuesday at Monday night at 6 p.m. Right. And so Monday through Friday, it'll be a new day opening gap. And then Friday to Monday, it's a new week opening gap. But it's the exact same thing. It's just the close of the prior trading day to the opening of the trading day that you're in now. That's your new week opening gap there. So we opened up here. The opening price, I found a fancy dancy new little tool that I never knew existed. And I was like, hey, I'm going to start using that so the gang can see. All right. And so we opened up here. We opened up last night at, boop, see that fancy little dude there, boy. Got me a new fancy new dude there, boy, so I can get to the back. So I could pop it up there so y'all can see the price. When I be saying, oh, it's such and such price and such price. Now y'all can see the price, man. So opened up there at 55.64.50. That's what we opened up at last night. Then we we kind of hung out there for a little bit. Okay, and we have us some time-based liquidity here. Right? Got us some time-based liquidity right there. Can someone in the chat please tell me why I call that some time-based liquidity? What is that high right there at? What is this high right here at 55.68.50? Why am I calling that time-based liquidity? What is that high right there? Oh, I forgot I got to make it big so y'all can see. Got to make the candles big. Now, hopefully y'all can see down at the bottom of the screen there, right? Somebody tell me in the chat, why am I saying that's time-based liquidity? What is special about that high at 55.68.50? What's up, Lil Hope? Right there. I got my cursor highlighting it. I know it's a 15-second delay, and then y'all be typing slow. So I'm gonna give y'all a second while I respond to my mother's good morning text. Did Kim and Lil Hawk really say London session high? Can y'all see the bottom of my screen? Can y'all see the bottom of my screen? Everybody in here is saying London high. Thank you, Tish. New York PM, right? That's and since it's in New York during Power Hour on Friday. Okay, yes, very good, right? And since it's a New York PM, what's significant about that in relations to the session that we in? You ain't see the PM. What's significant about this session we're in now to that high? That's a what? What type of high is that? It's in the New York PM, but it's a what? It's a prior what? It's a prior what? I thought it was AM. My bad. I give you that. I give you that. I give y'all that y'all ain't see the PM. I give y'all that. Session high. Very good. Very good. Wells J Rock. Very good, Tish. Right. So when we come into any session, right, we're looking for time-based liquidity to be engaged. Right. Time-based liquidity can be a prior session, a prior day, a prior week, a prior month, a prior, yes, session. Yes, Deborah, session high, right? So if you're trading near a prior day, you're looking for that as a priority over a prior session because a day is higher than a session. If you're trading near a prior week, you're looking for that as priority over a prior day and over a prior session. Whichever the highest one you're trading near, you're watching that swing point with the priority. It doesn't have to hit it, but you're giving the priority to that. And what I mean by that is, if this high right here, let's just pretend for a second to say this high was a daily high, right? When we engage this session high, we will look for signs that we want to continue to that daily high, right? Which would be a form of displacement, like it is here. We're displacing through this, right? And that's letting us know, okay, we want to go in this direction, right? And then we look for signatures to give us an opportunity to go into that direction, right? We're looking for stuff like that, okay? And we're looking for stuff to say, oh, we don't want to go to that. We're going to come close. And then if we start to break down, come in and start breaking down, then he's like, okay, we're not taking that. We're going down. You just look for the signatures to say, to show you what price wants to do. Okay. So we took out this time-based liquidity from this prior session, right? And we created a BISI here on the 7 p.m. candle, right? We came up and we filled in this SIBI from 1215. We got up to this order block, the order block right there at 55.74, right? That's the opening price of that last down close candle there. We traded up to 55.74 even. So we came up to the order block, to the tick, and then we traded back down. Hey! Stacks on stacks on stacks on blocks on blocks on blocks on blocks. What does expansion seek out? Expansion is tied to what? When you have consolidation seeks out equilibrium, what does expansion seek out? Expansion seeks out what? What is expansion tied to? Right? Drop it in the chat. Consolidation seeks out equilibrium. Expansion seeks out what? What is expansion tied to? Stacks on stacks on stacks on stacks, blocks on block, order blocks. Expansion is tied to order blocks. Expansion seeks, reversals seek out liquidity. Reversals seek liquidity. Wells, J Rock. Consolidation is tied to equilibrium. It seeks equilibrium. Expansion seeks out order blocks. It's tied to order blocks. Reversals seek out liquidity. It's tied to liquidity. Okay? And as you see here, consolidation, expansion, right? When we expanded here, we went to an order block there, right? We consolidated here, right? We expanded down. We came down to a order block. Expansion seeks order blocks, right? Will it go to an order block every single time on every single time frame? No, it won't. Because there's PD arrays on every time frame that price is seeking out. So on one time frame, it may be going into an order block, but on another time frame, it might be going into a fair value gap, or it may be a reversal on another time frame that's going into liquidity. Just on this time frame here, we got a consolidation, expansion, and then a reversal, right? And when we reversed, where do we come? Into this liquidity pool right here, right? What makes that a liquidity pool? Because it's below this low, and it's also a liquidity void where there's no orders happening. So below this low right here, there's a bunch of liquidity there, because the market is going to seek out that area, because one, it's a liquidity void, and two, it's below this low here. So there's a bunch of liquidity there. So this expansion and reversal, this reversal, see that? Look, oh, this good. Oh, this good. Oh, this is good. Is somebody on Al Gore's internet charge you $19.95 for this right now? $19.95 for this right now. Stacks on stacks on stacks on stacks, blocks on blocks on blocks on blocks. Don't forget the stuff that we talked about in week 1, because we just heard a new fancy term called Power of 3. Don't forget the stuff we talked about. Hey, man, shout out Father Legends. Shout out Father Legends. When I tell you this man shared his analysis with the gang yesterday, Friday, one day, he shared, I saw it yesterday, right? I saw it yesterday, but I don't know when he shared it in the Discord. When I tell you this man analysis was so on point, it was so, when it come to looking at price per the ICT concepts, this man analysis was so on point. I'm sitting there like, oh my goodness, this man there, this man is there. And one thing, Father Legend, if you don't listen to nothing else that I say, don't, if price, and it's gonna do what you said it's gonna do, because you got your analysis for both sides. And what I don't want people to fall victim to is trying to be right, trying to be that trader that says, oh, I predicted it was going to do this, and it ain't about being right. It's about making money. It's about making money. And the way you broke it down of price did this is the highest probability. And then you turn around and say, but if it does this is what I expect. You have the high probability based off what price has shown you. And then you got the reverse side of it if price chooses to do something else, because we don't know what price going to do. Only thing we can do is look for the clues, trust the analysis, and when price invalidates our analysis, then we pivot. You know, when you running and you plant that foot and you cut, once you plant that foot, you can't be thinking, when you plant that foot, you got to cut, because that hole ain't going to be open for long. It ain't going to be open for long. You ain't got time to be, you got plant, cut. If you supposed to be hitting the A gap, hit the A gap. Oh, anyway, man, the market is open. The market is open. The market is open. If you're going to trade, please trade. Say, hey, Father Legends, get off my screen. If you're going to trade, please trade safe. If you're not going to trade, please take copious notes so you can go back and study what you saw today and apply it to your future trading endeavors. Now, let's finish up this overnight price action review. I'm sweating, man. Let me turn my fan on. Now, so we traded back down and took out the low. We traded back into the liquidity void there, right? we created a SIBI on the way down. Now, creating it, I'm going to hide this new day opening gap because I really don't use it. But I've been putting it there for people who may trade it and add it to their what's the name? So now on this SIBI right here, right, with this SIBI right here, because it's right here was busy. Right. With this SIBI right here, because we came up, right? Because we came up here and took out this high with displacement right there, right? Because we came up here and took out that high with displacement right there, coming down into this liquidity void there, you would anticipate this SIBI to become a inversion fair value gap, right? And why am I saying you would anticipate that to become an inversion fair value gap? Because of how IPDub delivers price. Okay, so over here, follow me, right? Over here, we came down, like just say that's the liquidity. We came down to external liquidity, moved back up internal, came down to external liquidity, taking out that low, moved back to internal, right? Came down, stopped at internal for this range right here, and moved back to external liquidity, right? So now, right here, price is showing you that, hey, we have turned around, right? We have turned around because it did not come back down to external liquidity, but it went to external liquidity this way. So now when we came back in, we came back to internal liquidity, right? Which would be this inversion fair value gap right there. Also, also a balanced price range, right? Because you got a SIBI and a BISI overlapping each other right there. And then we move back to external liquidity, right? So we went internal back to external. So when we came above that high right there, right, we're anticipating any kind of retracement back just to be back to some type of internal liquidity, right? So when we come down, we're coming back down and we come to what? The draw of this liquidity void. We're expecting, move all this out of the way, we're expecting price to come back to this liquidity void because it created this void on the way up. So now when we see price come back to this liquidity void, right, after this institutional sponsorship, right, we're thinking this low should be safe. So once we make this SIBI and get into this liquidity void, we're looking for this SIBI to become an inversion, right? Because of how price delivers. Remember what I said, how price delivers, internal to external. Internal didn't come to external, right? Went back to external this way, right? Didn't come to external, went to external this way. So now you want to see it come back to some form of internal liquidity, right? And push up. Now, how can you not get fooled? Like, Tim, is dropping down and it's taking out that liquidity there, right? Remember on the one of the market maker model videos that we talked about, right? Right, one of the market maker model videos right there. So, right there, right? What is this right here, right? The one with the question mark. It's an ugly question mark. Very ugly question mark. What's this right here, right? Based off this, and this. What's that right there? Right, based off one of the market maker model videos we just looked at, right? This is what we're going to. If you already know what we're going to, you can go ahead and put the whole ounce in. But what is this right here? Right? Based off this, and this. Right? This is based off one of the market maker model videos that we just watched. Right? What is it? Okay, I'll make it easier. We'll do it one at a time. What's this right here? What's that right there that I just marked out? What is that? What is that? Just tell me what that is right there, what I just marked out. What is that? Did somebody put something in there? The G is silent. You would, okay, a swing high. Thank you. Thank you. A swing high. Swing high. Thank you. It must be a serious delay. Okay, what's this right here? Right? What's this right here? Right? And somebody said short-term high. Thank you. Short-term high. That's the answer that I was looking for. But a swing high, I'll take that. Short-term high, right? Short-term high. Okay, what's this right here? No, it's 15-second delay. Matter of fact, when y'all put it in this time, put a 2 behind it. Right? If you put swing high, put 2. If you put short-term high, put 2. So I know y'all answering for the second one. Right? What up, Lump? Good job. Right? See, this is why I like doing it in Discord, because you can just unmute and talk. Okay, so now we got a short-term high 1. We got short-term high 2. Right? Swing high 1, swing high 2. Okay, so now since we got short-term high 1, short-term high 2, swing high 1, swing high 2, right? What does that make this right there? When you got a swing high to the left and the right, a lower swing high to the left and the right of a swing high, what does that make this right there? Right. You got a swing high, an intermediate swing high. Very good. You got an intermediate swing high. So when you take out an intermediate swing point, what can you anticipate? You can anticipate a larger what? Right? Because you're saying, Tim, this was melting down. How can I not get tricked into thinking this is reversing? When you take out an intermediate term swing point, you can anticipate a larger what? Retracement. You can anticipate a larger retracement. And since we're anticipating a larger retracement, once we get this run on liquidity right there, now we're anticipating this SIBI to become an inversion fair value gap to support the fact that we took out a intermediate term swing high, and that means price wants to continue higher. Oh my freaking goodness, this is good. This ninja is teaching today. Oh my goodness. I kill me. I kill me. Okay. So, and the rest is history, right? Price just got back down below midnight, touched the inversion fair value gap during the London kill zone, pushed up again, right? We pushed up again, traded back down one more time after London opened below midnight, giving a London open an opportunity to get long below midnight. And then nothing can stop me. I'm all the way up until right now. That's where we are now. Right? Mark out the 7:30 open right there. Boom. That's all I got, man. That's all I got. Do anybody got anything for me? That's the overnight price action. We didn't really talk about the whole overnight price. I got into like lecture mode. Hopefully you got something out of this. Hopefully you got something out of this. If you didn't get nothing out of it, I promise I'll try my best the next time. So before we get out of here, does anyone have questions, comments, or concerns? All right, question, comments, or concerns. Oh, you know what? You know what? You know what I just decided right now? You know what I just decided right now? Right? Since you all are so supportive of my little close-knit community, right? Tonight at 7 p.m. Eastern Standard Time, right? Tonight at 7 p.m. Eastern Standard Time. If you have ever wanted to pick someone's brain when it comes to trading these concepts, when it comes to just anything with these candlesticks and gem, if you anything about trading, anything, if you ever want to have a one-on-one with somebody, right? But you can't afford to pay all of these ridiculous prices. I ain't gonna say ridiculous, and because people charge what they worth. You can't afford to pay for the one-on-one sessions. Pull up tonight at 7 p.m. on this YouTube channel. I'm going to go make the live stream right now. Pull up tonight. Somebody give me a fancy name. It's going to be free one-on-ones. Pull up at 7, right? Pull up at 7. It's going to be free one-on-ones. I'm going to have the link in the chat. You can pull up and you can ask all the questions you want. Right? If a bunch of people got questions, I might limit your time. But if a lot of people ain't got no questions, you know what I'm saying? We'll be here until I get tired of talking. Right? Pull up tonight at 7 p.m. Right? 7 p.m. And I need a fancy name for it. Matter of fact, y'all gonna do it with me. Y'all gonna do it with me. Pull up tonight, 7 p.m. sharp. 7 p.m. sharp. I put these counters over here so you can see what's going on with the chart. We'll put them on. What y'all want to watch the chart on while I do this? What y'all want to watch? 5-minute or 1-minute charts? What y'all want to look at? Y'all look at 5-minute or 1-minute candles. We get closer and closer to that prior day high. Right? Getting closer and closer to that prior day high. Looking at the weekly candle, I want you to peek at this for a second. Look at the weekly candle for this right here. Right? The way we close this week down like this right here, right? I would want to see like an open, high, low close, like so a down close candle for the week. So I would want to see it open, go higher, right? Then come lower and close down. You know what I'm saying? Like since we inverted this fair value gap, right? We've come down inside the wick of this order block right here. Right, I would like to see price come down to, since we inverted this fair value gap, come down to that one. Right now, mind you, this order block's job is to keep price up. Right, is to keep price up. But since we had such a strong close on there, I would love to see this candle open, create an open, high, low close. So a down close candle, just like we had made an open, high, low close there. Right, I would love to see an open, high, low close on that. Just mind you that candle there's job is to keep price up, is to push price back up to that high. That candle's job is to protect that low. So this candle's job is to protect that low right there, right? But since this is such a strong close candle, I would love to see it push up, come down, right? Push up and come down, especially since on the NQ, right? The NQ has already taken that low, right? The NQ has already taken that low, and the NQ, get out the way, right? The NQ has already taken out that low right there on a weekly basis, right? So, all right. NQ already took out that daily high. It already done got there. I was looking for an opportunity to trade up into that, but it didn't hit it before the time I trade. It didn't hit it before the time I trade. I put on 5 minutes. Trading up into that prior days high. NQ has taken out that prior days high. YM, we got divergence. The YM coming down. The YM has not gone toward the prior days high. Oh, the YM below the prior days low. The YM is below the prior days low. So we got divergence, major divergence. NQ is above prior days high. All right. NQ is above prior days high. ES is right at prior days high. And YM is below the prior days low and still selling off. So we got divergence still. Divergence still. All right. Okay. All right. So come over here. My photo, shop, photo, open up photo shop. I got to sign in. I forgot I signed out. Hey, I see it's a couple people inside the Discord. So if y'all got any questions or got anything y'all want to add, feel free to unmute and say something. I be having the craziest little pictures I be doing. We have the craziest little pictures I be doing. All right, so we got 9 minutes left on this 15-minute candle, with the possibility of creating a 15-minute BISI on the 9:30 candle, but we got 9 minutes left on that candle there. Right. We got this 5-minute BISI that we never traded back down into at 9:35. Right. We just continue to go. Right. We open up here at 9:30, traded back down below this little area of consolidation right here, back down into this potential order block there. Right, trading all the way back down into this order block over here. Okay, and then start to take off, created the BISI, and then went up and tapped the high. Right, so we barely tapped it. If the Dow was in sync, right, I would just be looking to try to get long off of that BISI right there. But since the Dow is not in sync, right? I will want to see how price reacted when it got to this BISI, like on a lower time frame, like a 1 minute, right? To see if we sweep this low on the 1 minute, if we swept that low, and then, you know what I'm saying, created a reason to go back up because the Dow is out of sync. You know what I'm saying? When it's divergence, I look for extra confirmation when it's divergence, right? And when it be divergence, I miss a lot of trades. I miss a lot of trades because I'm waiting for that extra confirmation, because the Dow is, you know what I'm saying, it's like the Dow the Dow was down at the lows and chopping. You see what I'm saying? The Dow is well below the low and it's chopping, right? The NQ is up above the prior day's high. So it's like, you know, I'm like, okay, what are we doing here? Right? And like we coming down here, and it's, you know, we've pushed through this fair value gap. And this is what I be talking about right here. See how we got 1, 2, 3 fair value gaps in this leg right here. Once we start pushing through one of those, I look for all of them to get pushed through, right? Now, this doesn't always happen, but whenever, see how we push through that one, we pushed, you know what I'm saying, commandly through that one, and then we dropped all the way down into the order block. You know what I'm saying? I'll be looking for all of them to get pushed through when one start failing. NQ target hit, I'm out. 1 minute fair value gap at 9:37, entry at 9:43. That's what's up. Congratulations. What time do you start trading? I usually don't start trying to look for an entry until like around 10 o'clock ish. I'll start looking for an entry, like I'll trade before 9:30 every now and then, but once 9:30 hit, I try to avoid that volatility between 9:30 and 10 o'clock. So I try to avoid that volatility, and then a lot of times it'll make me miss what I want to do. And then when I miss what I want to do, then I have to wait for something else to play out. And then a lot of times that'll make me end up not getting into a trade to sometimes after 11 o'clock and sometimes in the afternoon, because it'll play out, you know what I'm saying? It'll play out from 9:30 to like 10:15. And then now I got to wait for something else to set up on the time frames that I watch. And then when something else set up, I may not be getting into the trade. It may not play out until lunchtime, or it may not play. And then I got to wait until like the afternoon. It's like, so, you know what I'm saying? Because of the way I trade, it's like I miss a lot of trades because all this divergence, you know what I'm saying? If it wasn't all this divergence, I would be taking a lot of trades quicker, right? Right? You say you wait to 10:10. Yeah, or 1. Yeah. I avoid that first 30 minutes if I can. I avoid that first 30 minutes because it's like a lot of volatility coming in, especially when we got like a huge gap up, a gap down, right? It'd be like, it can be a little unpredictable. Let's go back to 5 minutes. Right. So that's that 5 minute BISI that we watching right there. See if we get back down to it and that whole price up to push it back to this, because we didn't really run them high. We just poked that high, right? We just poked it. That 15 minute, right? We still got 4 minutes left in this candle there, right? If this candle doesn't get down to 55.94.75, then we'll have a 15-minute BISI in this area right here. If this candle closes before it get down to 55.94.75, there'll be a 15-minute BISI right there also. Getting a strong rejection off of this swing high right here. That's an intermediate term high. So with taking out that intermediate term high, right, we could very well see a deeper retracement and come down and run below these lows, right? Maybe even run below these lows right here, get back below this 730 open, right? It doesn't have to happen, but because we taking out this intermediate term high, we could very well see a deeper retracement, right? We could very well see a deeper retracement. And this is what I was really wanting to attack right here. All this, if y'all, well, y'all ain't gonna remember because y'all wasn't on there. But last night when we was talking about price, I said it was a lot of engineered buy side liquidity up here, right? We just came up and tapped it right there when we came above that high, right? We tapped it. It's a lot of engineered buy side liquidity there. So I want to see it dig up into it, get up into this daily fair value gap before failing, right? Because there's a lot of engineered liquidity up there. I want to see it dig up in there. That's the engineered liquidity I was talking about last night when I was talking about, hey, we got all this engineered liquidity up there. Let's push up there, get into that daily fair value gap. Then if the daily fair value gap, if based off the 4 hour doing this, but if the daily time frame is controlling the mic, we could very well go up to, you know what I'm saying, it's such and such up here. We got some liquidity up there, and we got like a daily order block. So, you know what I'm saying, all the stuff we was talking about last night on the live stream, right? But that's that first spot of engineered liquidity that I was talking about there, and we just poked it, right? That's what I want to look for opportunity to trade up into right there. And on this 5 minute here, we're pushing past that 5 minute right there, right? Remember I said we took out that intermediate term high over there, so we could possibly anticipate a deeper retracement, right? We took out an intermediate term high there. We could possibly anticipate a deeper retracement. We get in a little bit deeper, and the reason why I say a little bit deeper because we're pushing through that 5 minute fair value gap, right? We pushed all the way through it with like little to no resistance, right? So we could very well come take out this low, maybe even take out that low. You know, we can anticipate a deeper retracement. And one thing we can look for, right? Since this candle is about to close, right? This candle is about to close, and when this candle closes, we'll have a possibility of creating a SIBI right here, right? It will have a possibility of creating a SIBI here, okay? And if we create a SIBI there, that'll give us a balanced price range in there. So once we come down, if we take out this low here, then you will look for signs for price to come back up and invert the SIBI and reclaim the BISI, right? Remember the fancy term reclaim order block? Yes, there's a such thing as a reclaimed fair value gap. The only thing reclaim means is you're back on the side of what that PD array should do. So a reclaimed bullish fair value gap is just a fair value gap that you traded through to the bottom side, and then now you're back on top of it, and you're looking for it to be used for support. It's a reclaimed fair value gap. A reclaimed order block is an order block where you, if it was a bullish order block, you're on the bottom side of it, and then when you trade back above it, now you're looking to reclaim that order block. So here we go. Got a little bit of a deeper retracement thus far. We're getting a deeper retracement so far, right? Run down and take out. If we come down, take out this low. If, like I say, since the Dow is so heavy, right? I hate this divergence, right? But the NQ is still, you know, trying to hold up. If the Dow wasn't heavy, right, I would just be ready to buy, right? But since the Dow is so heavy, I have to allow for this chop, right? We've taken out an intermediate term high. We come back down. Now that'll give us a chance to get down below tape. Now we're taking this sell side. Sell side has been taken here, right? Here comes deeper retracement. All right, we got the true session open right there with some sell side below that, right? Okay, we put, so that mean that we did not create no on the 15 minute, we did not create that BISI on the 15 minute, right? So now on the 15 minute, we've come down below that low, traded down. There's a BISI right there. There's an order block right there on the 15 minute, Right. Small Bissy right there. Right. Order block right over here. Okay, we got an order block here on the 15-minute. All right. So there's your deep retracement there. That's all the deep I would really like to see it go on a closing basis, right? That's all the deep I like to see it go on a closing basis to come back up and dig deeper into this. If we came down on a closing basis coming below this low, that would be too far for my liking, right? This 715 low, that's too far for my liking. That's all the deep I want to see it come on a closing basis is that deep there. We still got 12 minutes left on that candle though. Right? I don't mind if it sweeps the low, right? Just sweep it and reject off of it. But I don't want to see it coming down on a closing basis on the 15-minute, taking out that low right there. Right? That's too deep for my liking. Right? But since the Dow is so heavy, right? If we come from here to there, see, we've moved back into a discount of that move right now. Right? We're back into a discount of that move. So I don't mind it sweeping this if it wants to sweep that low to take people out, but I just don't want the 15-minute. We got 11 minutes, 11 and a half minutes left on this candle. I don't want on the 15-minute for it to be coming down on a closing basis, taking out that low. I really don't even want to see it sweep that low, but I'm willing to give that because of the divergence. But need to make a thumbnail. Helping, we're going to use this one here. Helping Franklin entry model. Hey. Oh. Gonna use that same picture right there. Ain't nobody give me no fancy title. What is going on? That's your specialty. Oh, my specialty. I ain't got no fancy title. I just this just popped up. This is like a extemporaneous thing. ICT question and answers live with Tim Rogers. Oh man, I don't want to use ICT name. I don't want to come off as scammy or thirsty. I don't want to come off as thirsty. Mentor Monday. Free. On your trading Q&A. Shinister. Sometimes you gotta pop out and show. I'm the one that up the score with. Hey man, hey, I am one of the few people. I am in the very, very rare minority, right? That feels like K Dot only had one song that was better than Drake, and that was the last one. Not Like Us is one of the best records of like the last few years that I can remember, right? And I was telling my kids, I was like, look, man, I'm 51, right? It's got to sound good first, and then I'm gonna listen to the lyrics, right? Back when I was a young hip hop head, oh, it was all about the lyrics for me. I don't care what it really sounds. Look, when it comes to music, it's got to sound good first. Then I'm gonna listen to the lyrics, right? I told him, I said, every song that Drake has done, right? Every song that Drake has done has been better until not counting that stupid AI thing. That AI thing was stupid. I don't know what that was, but until Not Like Us, I said, how many of the other Kendrick songs did people not say you got to go back and listen to it again? When he dropped Not Like Us, not one person said you got to go back and listen to it again. Nobody even cared about the lyrics. Everybody was just dancing because it was a bop. And I feel like because of recency bias, that's what made it a landslide. Because after Not Like Us dropped, nobody played any of the other songs. Not Like Us was the only one that everybody been making the meme, making the recency bias. Recency bias made it a landslide. But I cannot just say, if y'all made 5 songs apiece and this man had 4 out of the 5 wins, I can't just give the win to you. But can I say that you mocked him with Not Like Us? Yes, I can. Not Like Us was a bop. Not Like Us is a classic. Not Like Us is historic. Trade talk, Tizzy Tim. Tizzy Tim. We ain't doing charting though. Yeah. But it's just recency bias made it a landslide. Recency bias, because in the beginning it was always, and I think it's one of the things where Euphoria was a lot, but it's like every song people's like, go back and listen to it again. Go back and listen to it again. Why do I have to go back and listen to it again? If it don't catch me the first time, why are you trying to force it on me? You're trying to make me like it. You know what I'm saying? You shouldn't have to try to make me like it. Because when you going up and y'all 2 MCs battling, right? You can't come back and say, oh no, go back and listen to his verse again. No, once you get your verse, and then you off one listen. That's it. You shouldn't be coming. Go listen to it again. It's deeper than that. You got to listen to what he really saying. Why? Why I got to listen to what he really saying? You know what I'm saying? Why? You know what I'm saying? But, and I think it's one, and I really ain't got a dog in the fight. Yeah, because I like Kendrick, I like Drake. I ain't got a dog in the fight. I ain't got a favorite artist. You know what I'm saying? But when I'm listening to the songs, like me and my kids, the whole time they like, nah, Dad, Kendrick killing him. I said, man, Drake been mopping him and everybody on every song so far. I'm like, I ain't heard a song from. I like Kendrick been making good songs, but I ain't heard a song yet where he did what Drake been doing to all of them. And then when he dropped Not Like Us, that's what everybody was talking about. Now, and I lyrically, Not Like Us is the weakest song lyrically that Kendrick dropped out of the whole thing. lyrically, Not Like Us is the weakest. I want to say Family Matters is the strongest lyrically. Yes, Family Matters is I can't remember all the songs, but Family Matters, that was the strongest song lyrically that Kendrick dropped, in my opinion. The one when he was talking to Drake, whole family. That was like a lyrical masterpiece. But when it come to like battling, it was subpar to what Drake dropped, in my opinion. But lyrically, Not Like Us was the weakest lyrical song out of all of the songs that K. Dot dropped. They Not Like Us Q&A with that's it. That's it right there. They Not Like Us Q&A session. They Not Like Us. And I love double and triple entendres. You know what I'm saying? Just like that's why I like nines. I like nines. Nines be having the double and triple entendres, right? I love double and triple entendres. You know what I'm saying? I'm from the old school of rap when you had to have lyrics. I love that stuff. You know what I'm saying? But when it comes to battling, I want you to make me go, ooh, and I want it to sound good. I want it to sound good, and I want you to make me say, ooh, I'm 51. You know what I'm saying? I don't care nothing about it. You keep the real, son. Back when I was 17, got to be real, son, real lyrics, son. You know what I'm saying? When New York was the influence on everybody in hip-hop. Got to be real, son, real, son. Hey, we wicking out that low down there on a 15-minute candle. Remember that low right there? I was like, I'm okay with it wicking out that low. I just don't want to be closing down there. Got a nice strong wick. This 15-minute counter got 45 seconds left. Nice strong wick there. Uh-oh. What did I do? Yeah, son. Okay. Nice strong rejection off of there. Look for this to get inverted, right? If we can get a 5-minute inversion off of there. This right here, this is a strong rejection. This 5-minute candle that came below this low, we engulfing that candle right there. That's a strong change in the state of delivery right there, right? If like I say, if the NQ, we weren't having divergence, all of this is like real strong. That's a real strong change in the state of delivery right there. Right here, we got us a God dog it. Got a real strong change in the state of delivery right there, right? We swept by sell side there, closed below the sell side, and then the next counter immediately engulfed it. That's a really strong change in the state of delivery right there. That feeds into the narrative of a deeper retracement back, right? We got the deep retracement back, taking out the sell side right there. Got a strong change in the state of delivery, looking for this fair value to gap to become an inversion fair value gap right there, right? That will be another form of a change in state of delivery if we got an inversion fair value gap here, meaning this 5-minute candle that we're in right now closes above 55.8850. Right. If this 5-minute candle that we're in right now closes above 55.8850, that will be another type of change in the state of delivery. Right. The first change in state of delivery is right here on this order block, on this bullish order block. Why? Because we traded down below the sell side. Right. We was anticipating price to give a deeper retracement after taking out this intermediate term swing high. Right. We got the deep retracement. This 5-minute candle came down below the sell side and closed below the sell side, but the very next candle engulfed this candle here, right, giving you a strong change in the state of delivery on that bullish order block right there. Now, if this 10-15 candle can close above 55.8850, that'll give us an inversion fair value gap on this 10 o'clock SIBI right now. Why is this important? This is a macro SIBI. This is a SIBI that was created during a macro time, right? We took this sell side during a macro time, and then we're coming back and inverting this macro SIBI. That's a strong change in the state of delivery, right? Just like how I explained, this was a strong change in the state of delivery, right? When we swept that low and closed below it, the next candle engulfed it, right? That's a strong change in the state of delivery, okay? And then if we invert this 10 a.m. SIBI, that's a strong change in the state of delivery. Okay. Oh, this good. This is some good. Uh-oh. Order block still holding. Traded back down into the order block. Touched the high of the fair value gap. Right, touched the high of this 4-hour inversion fair value gap right there. Let's look at a 4-hour candle right here. So on a 4-hour basis, right, we got an inversion fair value gap here. This 6 o'clock candle at 10, it closed above this 4-hour fair value gap, above this 10 a.m. candle, right? So now this 10 o'clock candle here traded back down into this 10 o'clock inversion fair value gap, right? So you got a 10 a.m. SIBI, which turned into an inversion fair value gap at the close of this 6 a.m. candle, which is at 10. Then at this opening of the 10 o'clock candle, we traded back down into it so far, and it's still supporting price as an inversion fair value gap, right? On the 15-minute basis, traded down, swept that low, right? And now we're trading. We swept that low, didn't get down there on a closing basis like we discussed. I'm okay with it sweeping it, but I don't want to see a closure. On the 5-minute basis, we got the change in state of delivery so far. That's still holding, but we still have not inverted that SIBI. Right, so we got the change in state of delivery here. This SIBI is still putting up a good fight, right? But since we've traded up and going through the consequent encroachment, like I say, whenever I have multiple fair value gaps in a line, when one fails, I anticipate them all to get hit, right? Seems overall bearish to me. DXY is bullish right now. DXY, it's been trading weird lately with the indexes, right? And so it's been a lot of divergence. And with the NASDAQ being at the highs and the ES being at the highs, right, it's creating this weird divergence because the Dow is well below the lows, right? That's why I say if the Dow had been trading with the other indexes, right, I would be looking to buy this all day, right? But since it's this crazy divergence, right, the overall, I want to see it be trade out over, like on a weekly standpoint, I want to see the ES trade bearish, right? But if I want the ES to be bearish on a weekly standpoint, I want to see it push up to a I want to see it push up to some type of daily PD array, which is this daily fair value gap and all of this buy side liquidity up here. I want to see it take this before going down. You see what I'm saying? That would be algorithmic trading, in my humble opinion. You see what I'm saying? Because I want to open high, low, close candle, right? And an open high, low, close candle would consist of right. So let me find the open. Right, so if we went open, high, low, oh, get out of here. So if we went open, high, low, and close, even if we just did that, right, that would give us a candle right. Right. That look like that. Even if we did, you know what I'm saying? Even if we just traded like that, exactly what I drew, that would give us a candle that looked like that. Right. And that's just based off of right from this candle right here, right? From that candle right there, then open, high, low, close. That would give us trade back up, right? Trade back, give the lower time frame an opportunity to trade back up into this weekly order block, right? That'll get a lower time frame opportunity to trade back up into the weekly order block on the first touch. Now we always talk about first touch, right? So we come down, and now the weekly order block is created for, you know what I'm saying, the weekly time frame. And then the lower time frame have opportunity to trade back into it on the first touch while taking care of lower time frame business, right? Coming into that daily fair value gap, coming into this daily order block right here, and then trading back down. And then on the weekly, right, that'll give us opportunity to come back down. And then we'll be traded past, you know what I'm saying, dug down past this right here, but still respecting it body wise, right? Right, we right there at it. So now we will have to see, is it gonna, can't get it over there, but anyway, right, is it gonna draw down into this fair value gap, right, and then try to push back up to new highs? Or do we get into some weakness from August to September and pull all the way back down to the weekly order block before proceeding back up to new highs in the latter part of the year, right? Pull all the way back down into the order block before proceeding back up to new highs in the latter part of the year right here. Right. But that's just like how that's how I like to see price move, right? If it's bearish, go up, take care of some business, right? Give me an algorithmic reason for you to be turning around, and then come back down. That billing structure, because we at all-time highs. Bill out the structure for me. Build a structure out for me so that I can look at the price and be like, okay, let's do this. Let's do this. Let's do this. Right. It's my humble opinion. Not professing to know all. I don't know what's going on. I got so much stuff on here. It's all these lines. Okay, there's the inversion right there. There's the inversion fair value gap there. We got it on this 1020 candle. Right? Got it on the 1020 candle. There's the inversion fair value gap there. Right? The 1020 candle gave it to us. So that's another type of change in state of delivery. Boom. This change in state of delivery right there held up. See, we traded back down into the order block. Right? Change state of delivery right there. Traded down into the order block. Held up. Now we got another type of change in state of delivery right there. The inversion fair value gap there. Now it pushed us back up into, right, this SIBI, right? So now we're looking for this SIBI to become an inversion, and we're looking for this BISI to become a reclaimed order block. I mean, reclaimed fair value gap to support price to go up and dig deeper into that that high, dig deeper into that. Right. So right there, we stopped that consequent encroachment. Okay, have a possibility of making a BISI right here. Right, if this candle closes above, what is this here, 55, 89, 75, then we have a possibility of creating a BISI right there. Oh, let me go back to what I was doing. But you know, this chop slop be because of that divergence, man. That divergence. The YM just created an inversion fair value gap there. The YM just created an inversion fair value gap, showing signs that it might want to come up here and attack this high. The NQ is kind of consolidating right now. So now the NQ is consolidating and the YM trying to push. So now we still got diversion. We still got divergence. So, you know, high resistance, man. High resistance been the theme, the overall arching theme of late. Oh, I don't even know if I can do this while I'm on here. Are you sure you want to leave the studio? Oh, yeah, I won't be able to. I have to create it after I get off. All right. Anyway, we what you say? If I was to take this trade, my stop loss would be above 5603.25. This looks like ICT mentorship model entry for bearishness. Talk about going in right here. Nah, I wouldn't take that right there. I'm not saying it won't work, but the reason why I won't take that is because of everything that I had outlined before. We had just took out intermediate term swing high, anticipating a deeper retracement. We retraced down below like these sell side there. Then we got the change in the state of delivery there, right? We got to change the state of delivery there. And then we got another type of change of state of delivery here. So it's like stronger. It's not, that's not a strong short for me. I wouldn't be anticipating this to take this as a short, right? I was just looking for that to be a deeper retracement because we barely tapped that buy side, right? So I was looking for a deeper retracement, so I wouldn't take that as a short. I wouldn't have taken this SIBI as a short. And it looks like the mentorship short, but in my opinion, it wasn't it. I wasn't thinking short for this right here. I was thinking a deeper retracement and look for a reason to get long, which would have been this change of state delivery right there, right? That would have been the reason to get long off of this change of state delivery, and then something on the lower time frame, like on the 1 minute time frame. If we go to like 1 minute here, right? Once we got the change of state delivery here, pushed up, retraced back down, right? You got fair value gaps here, right? Your stop loss would have been below there, right? That was the trade right there. That was the trade that we talked. I ain't talking about an entry model, but we talked about, right? But we had talked about that setup before it happened. Right? We talked about that before it happened. Right? We had already outlined everything that was leading to taking a long position over here. Right? We had already said deeper retracement. Don't want to see a 15-minute closure down here. There's the 15-minute closure up there. Traded back down. Got the change in the state of delivery here. And that was the spot to look for the entry right there. All right. Come here to this 15-minute candle there. Go down to the 5-minute right there. Okay. Right there. See, we came back up. That was the closure. Right. That was the closure of the 15-minute candle here. This was the trade back into the change in the state of delivery. Right. That the trade back to the change of state of delivery. And then on the 1 minute, as you're trading back down into the change of state of delivery, there's your imbalance. Right. You got your breaking market structure on the 1 minute. Right. That breaking market structure on the 1 minute, retrace back down to the imbalance. Right. Got down to the change of the state of delivery, touched the high of this 1 minute fair value gap right there, and then price pushed up. Right? Do you have to get back to the high? No, you don't. But that was the trade that we outlined. Right? That was the trade that we outlined before it happened. Right? Oh, the screen was too low. All right. I'm saying make the screen bigger. Right? So on the 15-minute time frame, right? On the 15-minute time frame, when we was trading back over here, right? When we was trading back over here, we said, don't want to see a 15-minute closure below this candle here. We'll take a sweep of that low because we took out an intermediate term high over here. So we anticipate a deeper retracement, right? We got the deeper retracement, didn't want to see a closure below this low right here, right? Didn't want to see a closure below this low right there. Right. I like when it's red. I don't like, there you go. Right. So we got the 15-minute closure up there. All right. So then we were watching price on the 5-minute because everybody voted to watch it on the 5-minute. So this is our 15-minute closure price right there. Right. We said this was a strong change in the state of delivery. Right, because this 5-minute candle came down, closed below the 15-minute level we didn't want a closure on, and then this very next 5-minute candle engulfed this candle, giving us a strong change in the state of delivery right there. Right, so since we got our change in state of delivery right there, you will be looking for an entry on the 1-minute right here. Right. Then we said we're looking for this to become an inversion fair value gap on the 5-minute, because that would be another type of change in the state of delivery to say that you want higher prices. All right. So then let's go down to the 1-minute. Okay, this is our 1-minute chart there, right? Right at that change the state of delivery, the closure of that 15-minute candle. So now we're watching the 1-minute right now. Right. So then we're waiting on this to set up, and we're watching the 1-minute. So as price comes down, right, this is our entry here at the change in the state of delivery at that fair value gap. If you was waiting on this fair value gap, you got missed. Right. But we're looking for a trade at the change in state of delivery right there. That's it, because we're waiting for it. So there's your entry right there. Right. If you wasn't waiting for it and you just came in and started watching price after all of this had been created, then you would want to see this here, right? That push up, taking out that high, that fair value gap. There's your entry if you wasn't waiting for it, right? But since we were waiting for it, this is your entry here at the change in state of delivery right there. Right, if you just came in and you wasn't waiting for it, that's your entry there at this fair value gap pushing up. Right, so then yes, X that out, and now I see we're still pushing up right there. We're still pushing up there. So that, and this, that's why I was like, I wouldn't take this. I wouldn't take that as a short. Right, I wouldn't take that SIBI there as a short. Like I say, not saying that it can't work. You know what I'm saying? Not saying that it can't work, but yeah. Yeah, but we had already, you know what I'm saying? We had already broken down from it. And I'm glad you said that. I don't know how to say that. Copacetic, copacetic. Oh, copacetic. That's how you spell copacetic. Man, I never knew how to spell copacetic. I never knew how to spell copacetic. I never knew how to spell copacetic. I'm 51 years old, and I used to say copacetic. You know why I ain't know how to spell it? Because we used to say copacetic. We used to say copacetic. That's what we used to say. That's why I didn't know what that was. Everything copacetic. That was a common hip hop term. Everything copacetic, but we say copacetic. It's copacetic. I'm 51 years old, and I just learned that it's copacetic and not copacetic. Man, I appreciate you, copacetic trader. You just taught me something new. Y'all know how it is when you grow up saying words wrong. But and that's the and for anybody in the gang how did you take a big loss and a huge win? Tim, how did you take a big loss or a huge win? Tim, how did taking a big loss or a huge win affect your trading? Taking a huge loss affected my trading in the sense of two ways. The first way taking a huge loss affected my trading is it affected it negatively and made me want to get it back. Right? Taking a huge win, it affected my trading negatively. It only affected me negatively because it made me want to win more. Right? And this is all in the early stage of my trading. This is all in the early stage of my trading. That is the word of the day. Copacetic. Like copacetic is the word of the day because my whole life back when I was at Dillard High in Fort Lauderdale, Florida, wearing the fake Gazelle shades with the I ain't had a British Nikes. I got my little brother a pair of British Nikes, and they was too little, and he wore them, and we took them back. But you know what I'm saying? Wearing the fake Bally's, and the Gazelle shades, dressing like I was from New York, son. We said copacetic. Everything copacetic. But back to what I was saying. Early in my trading, I won big early in my trading. YOLO trading, right? And it's the worst thing that ever happened to me. One day trading the SPX. I put $4,000 on a trade trading the SPX. I took a SPX. I bought an SPX call, right? And I paid $4,000 to buy the call, right? I just paid $4,000 to buy the call. And then with the SPX, the way I used to trade, I wouldn't put a stop in like once it traded to a certain level on the ES. I would just close the trade because the SPX, it was so volatile, right? I stopped trading with a stop loss because I would get wicked out and it would go in my direction, right? So I would just watch the chart to see, okay, if it go to a certain level, I got to get out because it's going against my bias. And so I bought the call for $4,000 and it went in my favor, right? I took a little heat, but it went in my favor. And when it hit my target on the ES, I just closed the trade. And when I closed the trade, I noticed that I made $22,000 on that one trade. Blew my freaking mind, right? Blew my freaking mind. I said, you got to be kidding me. That turned me into a monster. It ain't nothing I couldn't do. So after a series of huge losses, everybody part of the gang, y'all already know my story. Like trading futures, you know what I'm saying? I lost like $14,000 in one day. You know what I'm saying? Trading options over like an option position. It wasn't one day, but over an options position, I lost like I think it was like $40,000 over an option position, fighting the market, trying to fight the market, kept averaging down, right? Instead of just closing the position, I'm averaging down. I think I'm like 1,000 contracts in this position, trying to average down, and it just, you know what I'm saying? I'm like, you got to be freaking kidding me. So the big wins, all it did was hurt me. The big losses in the beginning, all it did was hurt me because it made me want to get it back. When I detached myself away from the money, right? When I got to the point where no matter if I win or lose in a trade, if I followed my rules, right, I was fine with it. When I got to that point, that's when my trading like transformed, right? When I'm not happy about winning, when I'm not upset about losing, the only time I get upset is if I'm breaking rules. If I break rules and be like, Tim, you broke a rule, this is your punishment, right? Tim, you broke a rule, this is your punishment, right? Discipline. Once I got discipline, that's what changed my trading. Winning and losing is it. Winning and losing is only going to affect your trading negatively, right? It's only going to affect your trading negatively because if you get happy about winning, that's an emotional thing. If you get upset about losing, that's an emotional thing. So winning or losing is only going to have a negative effect on your trading because it's emotional, right? It's about discipline. It's about the discipline. Okay. It's about the discipline. Hopefully that was clear. And for anybody that took a short here and put your stop at 5607.75, you just got taken out the market. Because if you got to stop, if you got a stop market order, if it touched that price, it takes you out. If you got a limit order, it may not put you in. But if you got a market order, you just got stopped out. All right. Anybody that took a short over when we was talking about, it looked like because it does. It looked like a market. It looked like a 2022 mentorship, right? We touched liquidity. We had a break in market structure with a SIBI. Trade back in. You get short there. Put your stop up there. You just got stopped out. It looks like the 2022 mentorship. But gang, what do I always say? We are not what? Somebody put it in the chat. Somebody put it in the chat. What do I always say? We are not what? Pattern traders. Pattern traders. We are not pattern traders, right? We are not pattern traders. And this is all day long the pattern of a 2022 mentorship silver bullet. Silver bullet. Look here. 10 o'clock, right? This is the 10 o'clock candle, right? We have attack on buy side, a break in market structure, a SIBI, right? 10 o'clock, retrace back up into the SIBI, right there, into the breaker, right there, and you get short. That's the pattern. That's the pattern all day long. It has all the criteria of the 2022 mentorship, except for what's the draw? You see what I'm saying? What's the draw on liquidity? Okay. And based off what we had been seeing, price had been drawing toward this liquidity pool up here of this engineered liquidity. We talked about that last night. Well, for a lot of you, last night when we were down here trading, when we was on our call last night, and we was like, there's a lot of buy side liquidity up here, right there. We want to see price draw up into that daily fair value gap, into that buy side liquidity, right? That's the draw. So we're not trying to get short right there. We're not pattern traders. It's about the narrative. It's about the narrative. We're not pattern traders. Oh, and this is what I was about to say. I didn't have my what's name. Let me open this up. Now, for those who may be wondering about, I was about to say this before. I got asked a question about the wins and the losses. Right. And for those who may be wondering why I'm not super stressed about not participating in the trade that we was just speaking about is because last night, come here, is because last night I had already did a little trading in my what's the name? In my funded futures account. I had already did a little trading. Y'all know I don't be big on trying to like just jump into stuff on Mondays. But as you can see over there, I had already did a little trading in my funded futures account. Right there, my funded futures. I had already did a little bit of trading in my funded futures account. Right. So I wasn't too pressed about trying to like push the button for real this morning, because I don't be trying to like just jump into stuff on Monday morning. Right. Even though today was like, it wasn't like a horrible day. It was a pretty good day, but we still had that divergence, but it was still a pretty good, day overall as far as like what the market was doing. But I wasn't really like super pressed about trying to push the button. Okay. Hey man, that's I'm gonna call it there, man. That's all I got. I'm gonna call it there. I appreciate y'all for hanging out with me. When we get off, I'm gonna make the stream for tonight at 7. Here's the thumbnail. That's the thumbnail that we will be using. If y'all want to take a screenshot of that and share it with your circle, I'll take the banner off so that y'all can. If you want to take a screenshot of that and share it with your circle, feel free to do so. Let me do it like this. There you go. All right. If you want to take a screenshot of that and share it with your circle, be like, hey, man, y'all pull up. Free one-on-ones for anyone that want to pull up. His face still intact. Cut his body in half. What in the world? What's this? Object. Oh, that's heavy. Real, huh? Felt something lumpy on the inside, but there is no way of getting into this thing. It's some pretty thick material here. Uh-oh. What is that? Damn. Oh, woo, baby. Well, some fine today, guys, but do your due diligence and make sure to turn this into the Coast Guard or give the police a call. If you don't want to get into the wrong hands, or make sure not to open it. Just go ahead and call the police and get it disposed of properly. Right. He the uncle. When? Last night? Hey y'all, I'm about to jump off. Hey, I see y'all. Tonight. I see y'all tonight at 7.